10 charts, 3 features, 1 critical message. Today's daily market waves covers it all, from oil's supercritical closure to gold's possible new rally. A weed setup not to miss, and deep candle dives into NVIDIA and TSM. All in one episode, because going forward we are streamlining to 1 video per day. Let's make it count. And as usual, we start with the volatility index. I think today candles were exceptionally clear, so they didn't allow any bullish formation to build up, and they technically canceled this bullish candle here and here for volatility index itself and the futures, so we are going lower. How low? It's still the question, but this is something that we can check on the weekly frame. So far, these red line here for the index and the blue line for the futures, these are the cutoff lines. So if the index and volatility and the futures will close below these lines tomorrow at the close, then we are going for a much lower prices. So this would be an official top, big top on the weekly frame, and the volatility will continue to decline. However, if it fails, well, then it's going to be a different story and we might be looking for higher prices. That's a quick expectation for volatility. Now let's move on to the bond market. What are we seeing here today? So after a very strong move up, and I'd like to remind, we had three white soldiers on the 2-day frame yesterday by 10-year yield. Today it took a pause and formed a bearish engulfing. Particularly this is one of the strongest one, and I would expect yields to follow down tomorrow. At the 3-day closure today, it's potentially a hammer, but it also could be a consolidation candle. So far, the 3-day frame and the daily frames, they are strong bullish. The trends are bullish, and a much stronger move would be required to flip this over. And for the weekly frame, the candle is not decided yet, so it could be bullish, could be bearish. I'd like to emphasize that there is a very good chance that weekly will flip 8 by 20 EMA for a bullish cross. So that's the perspective. Now let's have a look at the chart. This is the chart for 20-year yield that we discussed yesterday. So far, it looks like this wave is a bit stronger than I would expect, and it might be actually the wave 1 of this one, of wave 3, and I'm talking about this potential. So this could be wave 1, 2, 3, and we would be looking for wave 4, for wave 3 somewhere down there. So this would be the perspective. This is one of the options. So this wave breaks fairly nicely into an impulse. However, there is also a possibility for a larger wave 2. I think that this would be normal to expect, and let me put this potential chart here. So if we see a stronger move here, and particularly if it breaks through the channel line, then I would expect a move lower at this point. So that's the possibility. Again, we need to see a confirmation tomorrow on the potential reversal. So far, nothing is broken on the charts. Speaking about TLT, the same situation here, an inside up candle. However, it requires a very, very strong confirmation in order to confirm the initial move today. And so far, the 2-day frame, it also had a chance to form a bullish candle here. However, it was pushed back, and it ended with a thrusting line, which is not exactly a bullish combo. So again, it would require a confirmation, but for this one, we would need to wait until Monday. So far, the weekly frame is balancing on the fence. It could be either bullish or bearish, depending on the closure tomorrow. So tune up for our weekly digest, weekly update. And this is the chart for TLT, short-term chart. If TLT reverses here, it would be an extremely interesting composition of waves, I would say, because this particular low today, it is lower than this one, but higher than that one. And in this case, there is a possibility of actually wave A, B, C here for bigger wave B, and we might be seeing another strong move here. However, everything only after confirmation. So far, nothing is confirmed. This is just a potential for the wave. So we might see a very strong impulse here for bigger wave A, B, C in red. However, if everything reverses here, and especially if it breaks below the red line, then I will be looking for a very strong continued move down. So far, nothing is decided. Tomorrow is a decision day. Now let's talk about the dollar. So the dollar is taking a pause, nothing decided here. So that was a bullish candle, bearish one, then a cancellation of a bearish one, and another undecisive candle. So we need to see how it closes on the larger frame. So far, the 2-day frame is also somewhat neutral after being strong bullish, and tomorrow we will be looking for a weekly closure, and I'm showing this the 8-day closure also tomorrow, which has a chance to form a very strong bullish candle. So that's for dollar, and the chart remains unchanged so far. We are not updating it until we see a confirmation and a closure on the weekly frame. Now let's talk about the commodities. So today's section is very interesting. And let's start with oil. So I was delaying to record this session until I can see a closure of oil. So it's been here for almost the entire day, and only in the final 5 minutes or so it pushed much lower and technically confirmed this bearish formation. This is a dark cloud cover, and now we have a confirmation. So the chances for oil to move lower tomorrow are very, very high, and we don't have 2 or 3 day closure, cannot evaluate the momentum, but the 12-hour frame also closed with a bearish candle. It was pushed in the final minutes, and now I'm looking for a continued move down. So far, the weekly frame, it looks bearish. If it closes like this, it most likely is going to be a consolidating candle, and a move lower would have higher probability. Speaking about the charts, no changes here. So potentially we're seeing oil is starting another impulse down, and if we see another lower low here, I would be considering this as a beginning of a new impulse. And just for a reference, it's not loading. Oh, something happened. So I will skip then for just to say verbally. I also wanted to evaluate ExxonMobil, Chevron, and ConocoPhillips that I usually do. And what I'd like to say that from the candles perspective on the weekly closure tomorrow, so far they are looking bearish, all 3 of them. But it's not decisive bearish yet, so we need to see a clear closure, clear confirmation. Now let's move on to natural gas. So natural gas is falling technically after confirming a top on the daily frame and the 2-day frame. Now it extended the bearish momentum to the 3-day frame. We have a strong bearish engulfing, a daily continuation, bearish continuation candle. Chances for a move lower are significant. And if the weekly closes like this, I would expect 1 or more weeks of falling prices. Speaking about the charts, potentially this is an impulse up of the bottom, and now I'm looking for wave 2 of slightly bigger than expected originally, and we discussed these targets yesterday. So these would be the most typical, the most probable targets for the wave 2 decline. However, well, wave 2 are the most unpredictable among all of them. So, and today is May 15th. So now let's move on to the next commodity, and this is gold. Gold formed an interesting candle today. So first of all, it's a piercing line, or some charts might show a Harami candle, but this is bullish. And if we see a strong follow-up tomorrow, particularly breaking through resistance line, well, that would be a potential beginning of a new wave upward. So even though it's a bit strange to see after a strong confirmation on the 3-day frame that gold is trying to negate this one, but this is kind of normal. Let's see how it completes it, whether it would be able to complete it in the next couple of days. Well, that's so far this is bearish. 3-day frame is bearish, and the weekly frame will be very critical closure tomorrow. So if it moves lower below the and closes below the last week low, it would be bearish, and we would be looking for a larger move down. But so far, bulls have a chance for tomorrow. This is a strong bullish candle. Now let's have a look at the chart. So this is the chart that we discussed for many days, potentially in ABC. If this wave rallies from here, and if it forms something, so this wave is still ongoing, something like this would be another wave upward. And from technical, from classical pattern perspective, I would say that this could be a bullish flag, something that can happen here. And if we try to measure the bullish flag distance, well, that would be interesting. So we might see, oh, not the right one. So this is would be the potential target. So I would be looking then, if this flag is confirmed, I would be looking for this target. So this would be 3,800, 3,550 approximately. Well, that's the perspective for this particular move. Let's see if gold makes a clear impulse of the bottom, and if it makes it into a bigger wave. So this is the wave of the bottom. This is how it looks. So far, it might be the very first impulse. So this is potentially with the very first wave 1, and I need to change the degree here. So this would be wave 1. We would be looking for a pullback and another wave upward. So far, this is impulsive. And this is the question. So this is a technical estimation. That is what we were looking for. This is MACD bearish cross that gold formed on the 3-day frame. Well, if it is reversed in the next session, so in 4 days by Tuesday, so in this case we would be looking for higher prices. However, there is a risk of falling down, and this cross is so already somewhat significant, so we might be looking for being very cautious here. And if gold moves wasn't able to reverse here and moves slower and makes another cross on 5-day frame, well, we would be looking for a bigger pullback. Speaking about the GOD trust, so it's not as decisive as gold itself. So this candle so far is potentially a bearish continuation, and on neck or in neck it will be closing tomorrow, and it will be very interesting to see. So far on the daily frame there is a possibility of reversal. However, we need to see a confirmation. Did you see this red candle that GOD made on May 12th on Monday? So after that we had a green one, and many thought that this is going to be a reversal. However, we didn't see a confirmation. The same situation is here. Maybe a little stronger, but nevertheless it's not confirmed yet. And the freshly made 8x20 EMA cross is a concerning technical signal as well. From the weekly perspective, we might not see a decision tomorrow depending on the closure. However, right now we are closer to the lower boundary of this tunnel, and if GOD closes below this level, I would say that this is a bigger reversal. Well, that's all about gold, and now let's talk about another commodities we haven't spoken for a while, wheat. By the way, if you found value on how we track the turns before the crowd catches on, this is the time to subscribe. We are building a community of traders who rely on deep technical signals, not headlines. And right now, for those who want more than just a video, our ultimate subscription includes full written access to market setups, wave charts, and high-level strategy across all major instruments. If you are serious about timing and signals, this is where to go. Visit us at investingangles.com and find the value for yourself. Now let's talk about wheat. So what I'm seeing here is potentially a very strong reversal. So this is a daily frame, a confirmed bottom on a daily frame, a very strong push about the 20 EMA line, and at the same time on the 3-day frame we are looking for a strong bullish engulfing. So I would like to say that in the next 1-3 days or even longer, wheat has a very high probability of a rally. And so far the candle on the weekly frame looks bullish. However, if it moves a little higher tomorrow, it would be even better. Speaking about the charts, this is the long-term chart that we've been tracking. It's one of my favorites since August 2022. And this is how it looks like right now. So in August 2022, I was expecting that in July 2024, it will hit this target area, and it was 514 at the time. Now it is potentially forming a bottom, a big one, but let's see the confirmations and the next moves. And in the weekly digest, I'm planning to chart a short-term perspective for wheat. If you're interested, don't forget to subscribe and check our videos. Well, now let's talk about the stock market, and we start with our candle evaluation. So after yesterday's concern that Dow Jones is going to confirm a reversal or bearish reversal, so it declined everything, and right now we are seeing the strong bullish engulfing candle for Dow Jones and for Russell. So S&P 500 and Nasdaq are both bullish. All four are bullish from the candle's perspective. Now let's have a look at the futures. So for futures on the S&P 500 is clean, it's bullish. For Dow Jones, it's also bullish, and for Russell, it's getting bullish. So it's a piercing line here. The only concern here is that Nasdaq, it's technically formed an advanced block. Well, again, this is a soft bearish combo, and it might be confirmed or might not. So at this point, it's just a very slight concern. Now let's have a look at the weekly closure, potential weekly closure. So far, we discussed that closure about this line, 567.42. For S&P 500 would be bullish. So far, it is on track for forming a very strong bullish candle. And the same for Nasdaq, which made it 2 weeks ago. And for Dow Jones is quite interesting actually here, because right now it is still sitting just a few basis points below the necessary level for confirmation. So if it stays like this, I would say that Dow Jones would remain bearish, somewhat neutral. And for Russell, this is an interesting shape of the candle, and I would be looking for tomorrow's closure, what kind of candle it is. If it is green, it becomes a green one, then we would be looking for higher prices. If it becomes a bigger red, well, that might be a concern. Well, now let's have a look at technicals. Just keep the technicals as a big reminder. So these are MACD bearish crosses monthly. So they didn't go anywhere. So we still need two weeks of a rally in order to negate them. So let's keep an eye. So this Elliott waves, the perspective for the futures. So far, this wave, I'm not quite comfortable with this wave at the moment because it has so many overlaps. Well, however, it still could be wave 3 if it stretches higher. So my target would be somewhere here. This would be the target for wave 3 potentially. This is, I'd like to say, so this would be for wave 3, maybe just a little higher here. So if it moves there, then I would be looking for a bigger impulse in green, 1, 2, 3, 4, and 5. However, if there is a strong move down, and particularly the cross below this blue line, then the impulse would be invalidated. This is something to keep in mind. Now let's have a look at the smaller chart. By the way, this was our call on April 22nd, 3 weeks ago, when we said that this is going to rally towards 59.20, and I think that this target has been hit today. And by the way, it represents about 12% gains from the moment of entry. And by the way, and speaking of precision, if you haven't checked our Master Trader's David Swing Trade Room, now might be the time. While most were guessing, his recent setups have navigated the turmoil with stunning accuracy. Now let's move on to the next one. So far, this is just a smaller version of the chart that we looked before. This is where it's becoming interesting. I was looking at the closures today, and honestly, I've been surprised. And now I'd like to explain why. So first of all, staples and utilities formed strong tower bottoms. So most likely they will rally higher. But now let's have a look at financials, for example. Financials and industrials, they are in the same boat. So after a strong bearish candle yesterday, today they formed an even stronger bullish one. However, However, they were not able to close at a new higher high. And this is a concern. They had a chance, but they were pulled back in the final minutes. And now I am treating this as a somewhat bullish but closer to neutral position. The same thing happened for the technology. And these three would be, if they act together, well, they would be a serious pull for the market. Speaking about healthcare, most likely it's formed a piercing line here and is ready to fly. And we will talk about United Health in just a few minutes. Speaking about consumer discretionary and energy, they are technically bullish candles, but in the context of the previous one, they are not very bullish, so it's closer to neutral. I would be looking for the next one to see the clear direction. And if we look at the large caps here, so this is another big concern. So let's say the Meta is formed a tower top, but it's not confirmed yet, so just by few basis points. But if we look at the 2-day frame, this is a dark cloud cover, and I would say this is a concerning development, especially if we see Meta falling in the next couple of days. This is Amazon. Amazon technically confirmed a reversal on the daily frame, and if we look at the 2-day frame, this is an even stronger formation. So we have a bearish engulfing of a spinning top. So Meta and Amazon both are in, I cannot say in danger, but they have a high risk of reversing there. So the same for Microsoft. Microsoft had a chance to form a very strong bullish candle, but decided to stop with a hammer. And now this is a neutral position, requires confirmation for either path. And NVIDIA also, yeah, I discussed NVIDIA yesterday, saying that it's overstretched and overbought. Now it formed a Harami candle, potentially even a Harami cross, very small one. But we will talk about NVIDIA in just a few moments. And another concerning here is Apple. So far, these two candles are not bullish, but they are not very bearish either. But if we look at the 2-day frame, it could be a strong Harami. So this is another risk. So we have Amazon, Meta, Apple, and potentially Microsoft if it falls tomorrow. So this is quite a combo, I would say. They represent a large portion of the market, and we might see a very strong move down. Speaking about the Buffett's company, it tried to form a piercing line, but in the end it finished with a thrusting line. And you know that this is viewed as a bearish continuation candle in most cases. Let's see what happens tomorrow. It looks like it's not going to be an easy session, despite that the indexes closed with strong bullish candles. Now let's talk about Nasdaq. So technically this is the same, very much the same chart that we just discussed for S&P 500. And just to emphasize those who followed us on our April 22nd call, this is the same chart, would be able to make about 17% non-leveraged on Nasdaq only. Well, that's the indices, that's the sectors and large caps. And now let's have a look at the specials of the day. And I'd like to start with NVIDIA. So what we are seeing here is an interesting story. So the candles, we already discussed them. This is not a healthy combination. And if we look a little deeper, let's say we have 1, 2, 3 big gaps on the daily frame, and they are not closed yet. So there is a chance that they they will be closed in the next couple of sessions or couple of weeks. It will depend. Let's see how it develops. So far, it is very concerning setup, especially considering that NVIDIA traded above the Bollinger Band. Now speaking about the charts. So let me this is the one that I wanted to talk about first. So this is the chart that we discussed on April 23rd, and this is exactly how we left it here. So I would say that it's been a bit more condensed than ABC formation, and I would be looking for potential wave B here. So this is today is May 15th, and this is what I am considering. And why this is happening? This because of let's now have a look at the small frame. So potentially NVIDIA formed an ABC here for wave A, and now we are looking for an ABC. So this is wave A, and this is wave B, and this would be potentially wave C up here. So far, it looks like it is an ideal target for the retrace for wave B for the technology sector. And I'd like to say that the wave A, if we look at the smaller chart, let's say the 1 hour chart. So this is wave A. Unfortunately, this is not an impulse. So this is wave. This is a corrective wave, either a zigzag or something else. But this is not an impulse. For impulse, we would need to have a higher high here, but it didn't happen. So that then we are looking for a potential corrective pattern of a larger degree. So the next, if this is wave 2, it might still go a little higher. Or wave B, then we would be looking for wave C down there. So that's the perspective. And if we look at the technicals, this is NVIDIA MACD bearish cross 1 month. So this is a super strong stretch, and it's much higher from the magnitude perspective than the previous one. And I just looked at the history of these crosses, and they never ever reversed in just 1 or 2 months. So they usually took much longer to do this. And just let's have a look at, let's say, the last 2 ones. So this cross and the corresponding decline took a while. So it was after the cross, it was 10 bars, 10 months. And after this cross, NVIDIA was declining for a year. And the same thing happens for the previous one. Just trust me, I checked all of them. So if NVIDIA reverses here and continues the rally, it would be a highly unusual event, statistically and technically. Well, that's something to keep in mind when we are looking at NVIDIA. And now I'd like to check what is happening with TSM. This is technically the same situation that is happening for NVIDIA. TSM formed a very strong cross, and right now it is trying to reverse it here. If it succeeds in the next 15 days, well, then we are going higher. However, the situation will just get worse, and we would be looking for a decline down the road, for a big one. Now, if we look at the TSM chart, this is what we discussed back in April 23rd, when we said that TSM potentially formed the bottom here and now has a chance to move higher before making another wave lower. So those who watched our videos and read our reports would be able to make a significant move here. So this is April 23rd, and now let's measure. So TSM made about 25% after our call. Well, that's quite impressive. Now we are looking for a reversal into a different direction. So for reversal down. That's the perspective for TSM. Now what we need to see is just a strong bearish move at the top. And similarly to NVIDIA that we just discussed, TSM also formed a corrective wave upward. And the final discussion of today, we are talking about United Health. It has been hit strongly in the recent days. So this is our chart on February 23rd when we said United Health is going down and it's going to be stopping somewhere between 320 and 230. Well, this is exactly what happened. Right now it's right in the middle, and off the top to the lowest point it lost about 60%. Now let's have a look at the candles. Today we had a very strong bullish candle, and I think that this misery is over. Most likely United Health is going to rally here. The question is what kind of rally it will be, and we discussed it just a few days ago that there is a potential for two types of rally. First is a corrective one. In this case, we would be looking for 1, 2, 3, 4, 5, a bigger impulse downward. Or this, if this wave is impulsive and the rally is impulsive, then we would be looking for full recovery, 1, 2, 3, 4, 5, and higher. And just show you another chart. So this is the 2-day formation right now. It's undecisive. It's very strong oversold, and I would be looking for confirmation for this daily frame, for the daily candle first. And this is, before we wrap it up, this is our long-term example of our long-term forecast. This was done in December 23rd, 2023. So I was evaluating the annual candles for United Health and said that it has a chance in the next few years to move below 380 and 233. So this were the targets at the time. And now we can see that it is falling down, and it looks like it is going to find a support at the 20 years EMA. Well, that's quite a move, and I would be looking for recovery from here. Well, that's the perspective for United Health, and let me wrap it up today's session. So volatility still dropping. Bulls missed their window. Yields cooling after liftoff, and TLT flashing bullish, but don't act before the signal confirms. Dollar sideways and uncertain. Oil, today's closure could change the entire map, and it is bearish. Natural gas moving lower, just like we charted. Gold could be the start of something big again. Wheat, classic setup forming, whether you're watching or not, up to you. Indices, mixed, but the sector breakdown was shocking. And the large caps, some just lit up red, and I think that tomorrow could be wild. Special features, NVIDIA and TSMC. The candles whisper truth, the headlines miss. And United Health, the end of misery, perhaps. A big wick is forming. our weekly digest drops in a few days, and it could reshape the midterm playbook for many of these investment instruments. Don't miss it. Subscribe, hit the notification bell, drop your tickers in the comments. We are watching. And share this episode with your trading crew on X, Discord, WhatsApp, Reddit, wherever smart money hangs. At Investing Angles, we don't follow markets. We forecast them before the crowd even blinks. See you in the next one.